AM 1060 WMEL. The views expressed on the following program are those of the hosts, callers, and guests, and are not necessarily those of WMEL staff, management, or advertisers.
Good afternoon. Welcome to Helping Seniors of Brevard, the radio arm of Helping Seniors of Brevard. My name is Kay Kaiser. I'm sitting in for Joe Steckler today. He's on special assignment. So we're going to have a very interesting show lined up here today and talking about some reverse mortgage with Barbara McIntyre. So before we introduce Barbara, I want to initially start off the show and thank our partners. I'll start by going about half of our list here because our list is growing all the time. Aldea Today, Atlantic Shores Nursing and Rehabilitation Center, Barbara McIntyre, who's our guest today, specializing in home equity retirement, reverse mortgage, Canadian Meds of Melbourne, Clear Channel Outdoor, Courtney and Braswell Financial Group, Ebony News Today, Ear Care, a brand new partner coming in with us, an audiologist, Gentiva Home Health, Handy Pro of the Space Coast, Hometown News, Levin Home Care Nurse Registry, and we'll continue. We'll pick up with the rest of our sponsors, our underwriters, in our second portion of our program. But before I go any further, we're in the holiday season, and I just have to say hats off to our president, our founder, Joe Steckler, and his very patient wife, Terry Steckler. I just wish the best holiday and Happy New Year and everything that's going to be falling in place for both of you and the nonprofit Helping Seniors of Brevard, which I'm so proud to be associated with. But without further ado, let me introduce formally now Barbara McIntyre. Welcome to the program today.
Well, thanks, Kay. It's great to be here. I enjoy the opportunity to have a few minutes to talk to the boomers and seniors in our wonderful Brevard County.
You betcha. Well, you specialize in something that not too many people may or may not be familiar with, but not only that, specialize in what you do. Why don't you tell our listening audience a little bit about your background and why you decided to get into your specialization?
Okay, be glad to. Spent a lifetime earning a living to support and raise up my family in management and accounting. And about, 12 years ago, I felt like it was time to change things up a little, and I just felt the need to find something that was more meaningful to me. Kids were grown and ready to head out on their own, and I was introduced after obtaining a national mortgage license, I became aware of what we always called back then only the reverse mortgage. And what I found was that it was a wonderful way to help people tap into home equity to actually meet the needs that they were having. And over the 12 years, it's changed a lot. But back then, as soon as I was introduced to it, I realized that it was going to help a lot of people. And so I felt compelled to continue on.
So you really have a niche in Brevard County. Are there many others that are really specializing in what you do in our community?
What you find mostly is large lenders that you see on on television that are national agencies that actually work from what we call a central platform. So you call an 800 number, they send you information, you talk to them on the phone. There are maybe a handful of people in the county that represent different companies. But yes, for 12 years, that's what I've done and have been working exclusively with the reverse mortgage, which really is called the home equity conversion mortgage, or HECM for short.
Okay. Mm-hmm. Well, we talked briefly before the program today, Barbara McIntyre, about differences between a home equity line of credit versus a reverse mortgage. Why don't you go in a little bit more detail and explain the real difference between those two? Okay.
The home equity line of credit, which people are really familiar with, it's called a HELOC, is something that you get from a bank. And what that does is it's a lien attached to your home, and it allows you to tap into some equity. It's a very common type of way to finance, and most people obtain it because they want to do home repairs, put a roof on the house, or they have a big expense. Sometimes they do it to consolidate their debt. Mm-hmm. There's a lot of reasons why they do it. So they go to their local lender, and they get this HELOC. The HELOC, of course, is a loan from a bank that requires a payment is made on it every month. It can be interest only or sometime principal and interest. But the one thing about the HELOC is that ultimately it will have a due date. It'll be called due and payable. When the housing market took a big turn and values dropped, lenders came back to their clients and said, sorry, we're going to have to reduce what we said you could borrow. And ouch. And then what a lot of people didn't know was after a period of 10 years, all of a sudden the HELOCs were what they call reset. And now they had a principal and interest payment that could be much larger than what they ever anticipated.
Oh, double ouch.
Double ouch. So now how the reverse mortgage line of credit compares, and I call that a RELOC, is it doesn't require payments, but you can certainly make payments. And then if a life event occurs and you have a struggle making a payment, you're not ever going to be in default if you don't make it. Or penalized. It absolutely does not have a due date, so you can draw on it indefinitely. You can even repay it and redraw it indefinitely as long as you live in your home. And most importantly, unique to the RELOC or the Home Equity Conversion Mortgage Line of Credit is that it has a growth feature. So as you continue to age, living in your home in retirement, it's going to give you access to more and more of your equity going forward, and it's not going to be reduced.
So now, is this tax-free?
Yes, ma'am.
That's an information
right
there.
Exactly. It's a tax-free source of money.
Right.
And so, you know, a lot of people have a feeling that our income tax rate over the next coming years is probably going to increase due to our country's debt.
Yes, right.
And so this is going to be another great hedge to source into some money and keep not have to pay the taxes.
Right.
So,
Well, that's excellent information. Folks, you're listening to, my name is Kay Kaiser, sitting in for Joe Steckler today, and my guest, Barbara McIntyre. If anybody has a question you would like to ask Barbara here on the live program, by all means, feel free to call the open line 321-241-1060, and she'll be happy to take any of your calls.
Absolutely.
I know that, you're the baby boomers in this community are growing, well, all across the country, but specifically in Brevard County, because a number of months ago we did a survey and we had an advocacy council and the growth. So what you're specializing in my opinion, is going to be such a need for, starting at, like, I think I understand you must be at least 62 years old
That's
to take
correct.
advantage.
62, right.
Okay. Well, I know that the growth is going to be even larger. And unfortunately, there's some people that are really in some bad shape economically. Many of the callers that I get at the office, and by the way, that number is 321-473-7770. My job is to get you to the right resources. So no matter what kind of question you may have, nothing is silly or demeaning or anything. We're here to help. That's what Helping Seniors is all about. So besides our educational, such as the radio program today, our television programs seen 5 days a week, our print, our newsletter, we have an 8-page newsletter in Senior Scene magazine. Our mission is not only to help our callers get in touch with the appropriate resources, but to help educate. And I felt it would be such a good advantage to have Barbara McIntyre come on the air today because of what you specialize in and where our market is growing. And for so many people, they're going to be hurting next year. I understand no raise in Social Security.
That's what I hear, too.
Medicare, no raise in that. So there's going to be a lot of people, I feel, that are going to be reaching out to you, Barbara McIntyre, for help.
Well, I'm certain of that. And what's interesting to me is that where this product really makes the most sense today is for folks that have a retirement plan in place, but the use of a reverse mortgage line of credit or a RELOC, again, put in place early is an opportunity to strategically plan for the retirement for the many years that we're going to be retired. And we're finding as boomers, we live a lot longer and healthier.
Right.
And for most people entering retirement, they're not comfortable with what they've been able to save.
Right.
And so having a house that has either a small mortgage that can be paid off with the reverse or no mortgage at all, so the line of credit can be put in place, it's just another part of a strategic plan to retirement.
Well, Barbara, that's a good point because it all comes down to planning.
Right.
And so many of the people that I speak to on a daily basis have no plan. They have no plan. So they are looking at, where do I go now? I can't afford one of these independent living facilities. I can't afford to stay in my home. And what your product does is afford them to stay in their home.
That's right. And I'm certain that that's why FHA, because this is an FHA product, because we have 11 to 12,000 boomers heading into retirement daily, hard to imagine, but the idea being most people want to age in place.
They do.
They want to stay in their homes.
And I'm going to add not only age in place, but age with dignity.
And have an opportunity to do some of the things that they couldn't do if they didn't have resources for some additional funds.
Exactly.
Some people, it's take a vacation. It's hard to imagine how many people live so close to the vest that getting a vacation is a difficult thing.
Well, that's a luxury, definitely.
That's right.
Absolutely. Why would someone look to you to give them accurate information about the HECM? You nicknamed the reverse mortgage, Barbara McIntyre.
That's right. Well, I guess because in the 12 years that I've specialized in it, I have prided myself in being a subject expert. This is the one mortgage product that I do. It is complex, and it's governed by FHA, who dictates to lenders all the rules around the product by putting out what we call mortgagee letters. Those letters give us the rules, and they can be complicated. So the product has changed over time.
And that's why it takes someone like you, Barbara McIntyre, who is a specialist, because the average person looking from 62 on up to left their possibility of doing this, and that's the beginning age. Is that correct?
That's correct.
Okay.
62.
But it's kind of similar to like navigating the elder system here. It's how and where do I go?
That's
Who
right.
do I turn to? I need help. Are the calls that come in. So in your specific line of business, it's only going to be growing, in my opinion. I think we both agreed with that.
Right.
But, what are some of the uses of the HECM?
Some of the uses that we see as people are using it for planning for retirement are things like possibly at 62 realizing they need to retire, but they don't want to draw Social Security until they're 66 so they can receive 100% of their benefit.
And a lot of people don't realize that fact in itself.
And that's another very important strategy to making your money last your lifetime.
Right.
You don't want to take a reduced amount of Social Security if by waiting 5 years you can get 100% benefit.
Right.
So that's one reason someone might draw on housing wealth for that span of time. Another reason might be that you want to put in place a line of credit that will grow, and this is something that I actually did when I turned 62 last April. I wanted to put a line of credit on my home so that when I turn 80, if I need home health care, I will have a resource to go to my housing line of credit, not have to requalify for it, have it be compounding growth through all those years, and now I have a significant amount of equity that I can tap into to pay for any health services I need.
Excellent.
That's another large reason.
A lot of people don't have any idea that they could be utilizing that money for future planning.
That's right. And that's what I try to do really, is just bring information.
Sure.
I don't feel that selling a mortgage is anything close to what I do. It's about just speaking to people, financial advisors, families, and anyone who serves Brevard boomers and seniors to give them the accurate information.
Okay. We haven't given your telephone number. How do people reach you here?
They can reach me directly with 321-259-7880.
Say that one more time.
321-259-7880. 7880.
Okay. And if you didn't have a chance to write that down, you can always call Helping Seniors of Brevard at 473-7770 because we keep all those numbers handy. So, Barbara McIntyre, I find it fascinating the fact that not only are you specializing in this specialized type of funding or, reverse and as far as a reverse mortgage, but where do you see the future of this going? Do you find it going to be, you mentioned to me prior to the show how many changes have taken place over the years.
That's
and
right.
From what really started as a reverse mortgage is a totally different product today, right?
Absolutely. Years ago, it clearly was a mortgage of last resort, and that's what we called it. It was when a elder person had basically spent their retirement funds. Now they have a house, but they have no other additional access to money, and so as a last resort, they did the reverse mortgage to tap into equity. It was extremely expensive. And it truly was something that was done just because there was no other place to go. When I met with seniors back in those days, they would say to me, Barbara, so what's the downside to this? And
That's a good point.
That's right. And I would say it's the most expensive loan on the planet. Ugh. And you're not really wanting to do it unless you plan to be in your house at least 5 years. So some of the biggest changes with the product over the years have been that it's a lot more now like a regular loan.
Okay.
The costs associated with it are much more similar to any type of loan you would do.
Okay, good.
And some of the other, it's very much, you have a variety of interest rates. You have different reasons. We started to touch on some of the reasons that people would do the mortgage. And so every situation is different. And it certainly is not as expensive, anywhere near as expensive as it used to be.
Well, looking at the reverse mortgage market today, some people may say, well, what have I won out of it? Look out and down the future. Am I locked into this? So
sure, I'm asked that question a lot.
I bet. What's your response?
The response is, of course, you can get out of it anytime you want, because probably the biggest myth about this product is somehow the bank is buying your house from you. And so you think you're locked in, but that's absolutely not true. A reverse mortgage or a HECM is exactly the same as any other loan. It's a lien interest on your property.
Okay, that's a good way to put it. It's a lien against your property.
Just like any mortgage.
But you're not going to be penalized, if I put it in that perspective, of getting out of the loan.
Yeah, no, there's no prepayment penalty.
All right.
And you can decide you want to sell your home at any time, put it on the market, sell it. You pay off the reverse mortgage just like you would have paid off a forward loan, and you sell the property. The same thing happens if you live in your home until you pass away.
Right.
You would typically have some things set up to pass your assets, including your home, to your children.
Okay.
And your children can do the same thing. They can decide if they want to keep the house. If so, they would use another asset to pay off the mortgage or get a new mortgage to pay it off.
Okay.
Or they would just go ahead and sell the house and pay the mortgage and keep the difference because the house belongs to the borrower and their heirs.
Got it. That's important to note.
Absolutely.
You're listening. My name is Kay Kaiser, sitting in for Joe Steckler today with Helping Seniors of Brevard, the radio arm, and you're listening to Barbara McIntyre, who's a reverse mortgage specialist here in Brevard County. I think, every time I'm kind of just shooting off the hip here a little bit today and just thinking common sense kind of questions that people might be interested in learning more about. And you brought up some really interesting things, and I think maybe in the second part of the show we'll talk a little bit about, the children, the heirs, and, looking at, did this couple or did this person who has the reverse mortgage put everything in writing? And I think it all goes back to that plan word again, doesn't it, Barbara?
Yeah, it sure does. Okay. Yep, planning. It's all about the planning.
And, it's amazing to me how many people really don't take the time to, in other words, get organized a little bit and have, they say, well, I wish I would have had 20/20 hindsight and would have done this or done that. And then suddenly they get a crisis in their life going on, and they're looking, where do I go? What do I do? And it's just a matter of sitting down and thinking about what are your options? Where can you go? Who can you talk to? And that's what Helping Seniors of Brevard is all about. Calling that 473-7770. We're here to help put you in the right direction with appropriate resources. Mm-hmm. So reverse mortgage is just one option out there, but I feel like, as I mentioned before, all of this is going to grow. I think that you're going to become a more and more popular product.
Absolutely.
Once people understand the benefits of a reverse mortgage.
Absolutely. I think it's going to become much more mainstream. And, I do believe that banks that had previously gotten out of the product, like Wells Fargo, they may step back in. Now HUD has made some moves that the lenders were looking for, which was, how do we make sure that people that get a reverse mortgage are able to continue to pay their taxes and insurance going forward? That's one of the only things that would call this loan due and payable. Mm-hmm. Is if a borrower failed to keep their homeowner's insurance in place or failed to pay their property taxes.
And that's an important point, because regardless, if taking out a reverse mortgage, that person is still needs to have that money to pay the tax and the homeowners.
That's correct.
That part doesn't go away just because you've got a reverse mortgage.
No. Now, you can use reverse mortgage monies to help as a resource to pay those things.
There you go. Okay.
However, the lenders now, and this is thanks to HUD, FHA,
right.
We now have something called financial assessment, and it is a way that we can look at a borrower and say, do they actually have resources like enough Social Security income and other things in place, and a willingness and capacity to be able to pay these fees, because we didn't want to set anyone up to fail.
I think in the second part of our program here, we've got about a minute left here in the first segment. Well, I want to touch more about that financial assessment that you just brought up, because that's an important issue that I think must be looked at as part of the whole plan here. So I'm going to take a quick break here. You're listening to Kay Kaiser and replacing Joe Steckler today, and it's a pleasure to have Barbara McIntyre on the show here today. So stay with us. We'll be back in just a few.
AM 1060 WMEL.
Welcome to the second part of Helping Seniors of Brevard, the radio arm of Helping Seniors of Brevard. My name is Kay Kaiser. I'm sitting in for Joe Steckler today, and I'm really, really proud to be sitting here next to me, Barbara McIntyre, who's a specialist in reverse mortgage. But before I go back into our conversation where we left off, let me give a special thanks out to our additional sponsors, our underwriters here. Peaceful Beach Mediation, Riverview Senior Resort, Seniors Scene Magazine, Seniors Helping Seniors, Solid Bite Dental Implants with Dr. Lee Sheldon, Spotlight Magazine, the Eye Institute, the Fountains of Melbourne, Vitas, Innovative Hospice Care of Brevard, Wendy Handy, Sales Associate for Dale Sorensen Real Estate, Wilderman Malik, our attorneys, Bill Johnson, an elder law attorney, and then we have our special WMEL 1060 AM here, our part of and Wusthof Health System. So we continue to grow with our participation of sponsors, underwriters, but I'll tell you what, every single one of them would be a very trustworthy recommendation for anyone who's looking for a specialization, such as Barbara McIntyre in reverse mortgage, or an elder law attorney, such as Bill Johnson. I mean, our list of sponsors has been wonderful, and they're wonderful to work with. So we love having them on board and helping seniors of Brevard so that we can do our job and our media outreach that we do. So we've got some interesting things coming up here, and Barbara McIntyre is going to be featured in the January Senior Scene magazine, our newsletter, which is a centerfold, 8 pages, folks. So we encourage people to actually pull that section out, hold on to it, create maybe a little notebook, because our partners who write those articles are professionals in their field. And again, having them on board is another purpose to help educate our public here. And as our seniors are growing rapidly in quantity in Brevard County, no other nonprofit organization does what we do. So thanks to Joe Steckler and his persistent attitude and positive attitude, we are making a difference, and we intend to be around here for quite some time, folks. So if you have a question you would like to ask Barbara McIntyre, she'd be happy to front your question on the air here live today. That number to dial for WMEL is 321-241-1060. And if you have a question that you'd like to call Helping Seniors of Brevard, by all means, call 473-7770. And I'm not always at the phone. I'm here today. But if I have someone on the other line, be sure to leave your message. I return all the calls. So without further ado, let me welcome back again Barbara McIntyre.
Well, hi, and thanks again. It's great to be here. And I have to say, being one of the many wonderful sponsors with Helping Seniors of Brevard is just an honor. And I love Joe's vision of bringing a group of people together that all are like-minded about bringing information to the seniors in our county, and I'm very pleased to be able to be a partner too.
Well, thank you, Barbara. We appreciate that, and we're hoping that all of our other partners feel the same way, which I know they do because they get all this credit too.
Yeah, I'm sure they do.
Well, we try our best to try to mix it up a little bit, and that's nice because you don't want to talk about the same thing every week or read the same thing every month and so forth. But Joe Steckler does such an incredible job on his writing, and it's just like he's a genius in that great cerebral up there as far as the information that he's got. Of course, he's been in the elder field for some 25 years now, so I'm a mentor for him. I mean, I'm like a sponge. I want to soak it up.
I do know.
Oh, boy. I could go on and talk about Joe Steckler here today. Him always doing the show, that he doesn't get a chance to pat himself back on the shoulder a little bit.
Right. Well, he is. Just meeting him and having a conversation, right away his dedication to the seniors and everything he's done in this county. It's awesome.
Absolutely. Well, if you're just picking up, I'm talking to Barbara McIntyre today, who is a specialist in reverse mortgage. And prior to our break here, we were talking a little bit about this financial assessment. And with Barbara, if you could go into a little more detail on what that all involves.
Absolutely. As the reverse mortgage product has changed over the years, it has one of the areas that was of great concern to the lenders were that they really wanted to make sure that the senior clients they were working with, once a reverse mortgage was in place, would be in a perfect position to continue to age in place and have what they needed from the mortgage.
Okay.
Since the mortgage would only be called due for non-payment of taxes and insurance, it became very important that we came up with some way to assess the ongoing income for life for the borrower, and their credit or their willingness to pay their expenses, so that we wouldn't be in a position of ever having to foreclose on a senior client. So
that's a good point.
It is,
yes.
And it took HUD 4 years to come up with a criteria that would not. It was not just like a regular loan. It's like a debt to income or loan to value. It couldn't be like that. It had to be more subjective. You had to have the ability to look at the entire situation for the senior borrower to make sure you weren't excluding someone who could truly make it work. So financial assessment, it's complex, but it's not complex for the borrower if the originator, the person like me, or the loan person, fully understands how financial assessment works. We ask the right questions, and then we can give the best advice.
And that's why you're a specialist.
That's right. That's absolutely right. And believe me, I had to read that mortgagee letter many times.
I can imagine.
Because it is a bit complex, but it's really working well. It came out in April 27th of this year. Financial assessment was introduced to reverse mortgage, and all the lenders, their software and everything to process loans had to be all updated, and everyone had to really understand. And so now it's becoming second nature to us, and it's really working. It's allowing us to really assess a borrower's capability to stay in their home going forward.
Okay, and that's important.
And it also, for the first time ever, allows the lender to escrow for taxes and insurance out of the proceeds. So
let's say that again. That's an important point. As far as understanding how this whole procedure works.
That's right. So because of financial assessment, lenders have the ability, if the borrower chooses, to escrow, in other words, hold money aside to continue to pay the taxes and insurance for the client going forward.
Interesting. Okay.
So now, for some borrowers, not only do they not have to make a principal and interest payment on a mortgage, but they also don't have to worry about the taxes and insurance because the lender's held the money from the proceeds and is going to pay it for them. So
that's
again,
interesting.
It's another thing that's moved.
I didn't know that.
Yeah,
that's
it's a lot.
I just learned something on that one.
There's always something new with this product. So.
Wow. Well, I think too. You mentioned the fact that wait a minute, you can purchase a home with a reverse mortgage?
Yes, ma'am, you can.
Unbelievable. Now, that's another thing I didn't know until today. So let's explain that a little bit, Barbara McIntyre.
Okay. Basically, the way that it works is the same as a refinance transaction.
Okay.
It's just that in 2010, HUD said, why are we requiring a borrower to buy a house and do that mortgage transaction and pay the fees and then turn around and do a refinance using the HECM so they could draw equity back out? So they said, we should come up with a way to allow someone who is buying a property to determine what the reverse mortgage would give them in a loan, and then that borrower just makes his equity contribution in cash, and now he owns his home and he doesn't have to make a principal or interest payment. And that's really, as simplified as I can say, that's really how it works.
That's amazing.
It's really, it allows people to either where they wanted to have no payment and have it be a cash transaction.
Right.
Now they can actually buy the house they want using the reverse mortgage. They can keep more of their cash in their bank account.
Okay.
Or for someone who wants to buy a home and they only have a limited amount of cash, now they can buy more house better suited to their retirement.
Right. Using
the reverse mortgage and the cash that they had set aside. So it accomplishes two different things for two different types of buyers.
It totally sounds like it. Totally sounds like it. You're listening to, my name is Kay Kaiser, sitting in for Joe Steckler today, and our guest, Barbara McIntyre. I just learned two things I was totally unaware of. So again, this is what we try to do. We try to help educate. So if I get somebody calling me about, wait a minute, you mean I can buy a home with a reverse mortgage? Well, let me send you to the expert here, Barbara McIntyre, because I'm going to say, yes, now that I know. Let's talk about some of the myths and facts on a reverse program. I think you said the reverse program is risky. Is that a myth or is that a fact, Barbara?
Well, actually, it's pretty much of a myth because, as I said before, it's an FHA product, so there is insurance around the product. So it really isn't risky because the benefits to the borrower are insured by FHA.
Right.
And the repayment of the loan is insured by FHA to the lender. So everybody has FHA to fall back on if something should happen. For example, years ago when housing values dropped,
yes,
then some loans may not have been the house may not have been worth what the loan balance was.
People upside down.
Yes, they were. Yeah. So in a reverse mortgage, it was not going to be a problem for the borrower or their heirs because FHA made up the difference between the house value and what was owed.
Interesting. Okay.
Right. So it's really not a risky loan.
You explained that perfectly. Now I got it. And the fact is too, I heard I heard, Barbara McIntyre, that closing costs on these reverse mortgages are just sky high. Is that a myth?
Well, it's a myth anymore. I have to say it used to be pretty true. But nowadays, like I said earlier, because the HECM reverse mortgage has become more like a regular loan, you have a lot of options within the program itself. So you can reduce closing costs by choice of interest rate. So just like a regular loan, if you want to pay a little higher closing cost to obtain a lower interest rate, you can do so.
Let's give some of the audience an example. Let's say somebody's going and they got a $100,000 home, totally paid off. Let's talk about interest rates versus closing costs. Let's give some examples, numbers here. I think would be a good.
Okay. Well, the some additional rules from FHA also had to do with what the mortgage insurance premium, which is part of a closing cost, would be required to be paid. So one of the big things that has changed is when a borrower, for example, does not have a large mortgage they have to pay off, and let's say like I did, I just wanted to put a line of credit on my home, and I wasn't going to draw any money or less than 60% of my benefit, my mortgage insurance premium was only 0.5%. Okay. Now, if I had a loan, a large loan, and I needed to draw more than 60% of my benefit, the mortgage insurance might be 2.5%.
Okay.
So the closing costs, and then the rest of the closing costs are similar to just a loan, a regular loan. Florida, the state of Florida certainly gets their hand in the pot because we don't charge a state employment tax.
Correct.
So mortgage transactions are a big part of their income.
Right.
And then surveys and appraisals, all the regular loan costs. It's very similar.
Okay.
So
very good.
It can be different for each type of loan. But the most important thing to know is that because the reverse mortgage gives you so many options, we even have options for people that want to virtually pay almost no closing cost to have a line of credit, for example.
Then they would pay a higher interest rate.
That's right.
Okay, got it.
And you're only paying the rate is only accumulating in the loan once you've borrowed the money.
Gotcha. Okay. That makes perfect sense.
Which is why anyone considering looking at how this might fit into their plan needs to speak specifically to their own situation, because all situations are different.
And that's why you're a specialist.
That's right.
You've got all the answers here. Barbara McIntyre, I'm really very interested in I'm learned so much just speaking with you here today on your specialization of reverse mortgage. Let's let the people know how they get in touch with you again. Shout out your number.
Absolutely. It's 321-259-7880. Again, it's 321-259-7880. And it's always my pleasure to answer any questions, to run calculators, to listen to your need and tell you how the mortgage might fit into your long-term plan.
So if you didn't write the number down, call Helping Seniors of Brevard at 473-7770. So we've got all the numbers here available to us, and we'll make sure we put you in touch with Barbara McIntyre. Let's go back a little bit and talk about some of those myths, I think. You said that your home must be free and clear to get a reverse.
No, that's not true.
Okay.
A lot of people have a mortgage on their home, and they're having to pay a payment every month.
Right.
And as long as the benefit to that particular client is sufficient enough to pay off the existing mortgage, then you absolutely can use it to eliminate an existing mortgage, whether it's a first position lien like a regular mortgage or a home equity line of credit from a bank that you might have just received a reset letter telling you what your new payment is going to be. It's a perfect opportunity to use the refinance option of the reverse mortgage to get rid of that home equity line of credit so that don't have to pay that new principal and interest payment the bank is requiring.
Okay, that makes sense. And the mortgage is used as a last resort.
No, we talked about that.
No,
It used
just
to
again,
be. That's
let's
right.
talk about that again, because I feel that's an important point.
It is.
Okay.
It is.
Just a little bit.
There, years ago, it was a mortgage of last resort. But nowadays, what we're finding, if we pick up financial journals, we're reading more all the time where the statisticians that advise financial planners and give them ideas of ways to position their clients' portfolios to try to ensure that in the 30 years someone might live in retirement,
right,
that they don't run out of money. They're starting to show the financial planners how to add housing wealth with the use of the HECM line of credit feature and use strategically to offset downturns in the market, to defer Social Security, to pay off existing mortgages, to use it strategically. And when they add that asset, they see, now we can look at the glide path of retirement, and we can see that the money's going to last. So it is definitely no longer a mortgage of last resort. And with that being said, even financial assessment, some people that really use the reverse mortgage as a last resort may not really qualify because they may not have the income to ensure that they can pay their taxes and insurance.
Well, and that's part of the assessment then.
That's exactly right.
Okay.
That's why that part's so critical. So
yes,
it's really not the reverse mortgage people think they know.
Right.
It's a whole different animal today.
It sure sounds like it. And it's a much easier program to understand than what it initially started out to be. And, people were so scared. What am I going to do? I can't get out of it. I did this 20 years ago and all that.
Well,
so
Kay,
they're freaking out.
You would be surprised. I still get calls occasionally from someone who has a reverse mortgage and does not understand.
I believe it.
And so it's my pleasure to talk to people, whether they already have one, whether it's the heirs and their family has now, it's time to pay back the mortgage, that to have a misunderstanding of what their options are. I just want to be the Brevard County resource related to this product.
Absolutely. I can remember working in a retirement community for years, and people would say they want to move into an independent living environment. Oh, I can't afford it. I can't sell my house. I've got a reverse mortgage on it.
And that's so not true.
Oh, and that's not even close.
No.
So I said I really would advise them, you need to talk to this person that got you into it to help you understand what are your options here.
Absolutely.
Because they were really scared. They said, there's no way I can get out of it.
Yeah.
Because they simply just did not understand.
That's right.
Bottom line. Well, Barbara McIntyre, it's really interesting. People think that they're going to lose their Medicare or Social Security benefits by getting a reverse mortgage even?
No, absolutely not.
See, that's important too. They think, is that income going to be taken away from me?
No.
So
the proceeds, the monies that are drawn from a reverse mortgage are a loan proceed.
Right.
So they absolutely do not, because remember, they're tax-free, and they don't affect Social Security or Medicare. Now, if someone was receiving Medicaid benefits, which are a benefit that is income driven,
correct,
they qualify for it based on income.
Right.
They can still use a reverse mortgage. It just has to be used smartly. They have to make sure that they don't ever draw too much funds and let their bank account exceed a dollar amount. I've had a few Medicaid clients, and we drew the money when there was a house repair. We took care of the repair, got the bill, transferred money in, and immediately paid it off. It didn't stay in the account. So.
Okay. Well, that's really important information. Folks, if listening to today to Barbara McIntyre's maybe opened up a little bit of pathway for you to consider. And I want you to know that calling Helping Seniors of Brevard at 473-7770. We're here to help. It's been an incredible pleasure to have Barbara McIntyre. Shout out your number to our listening audience one more time for you.
Okay, 321-259-7880.
All right. Well, you've been listening to My Name is Kay Kaiser, sitting in for Joe Steckler today. Barbara McIntyre, a home reverse mortgage specialist. Let's get all, I know you've got those fancy abbreviations, but I'm just telling people what the bottom line is here.
That's perfect.
All right. Well, it's been a pleasure speaking with you today, and we look forward to having Joe Steckler back on the air next Thursday. So if you have any questions, again, call us at 473-7770 and make it a great day. Thanks for listening.